Welcome to Yellow Tunnel. My name is Mark Harpel. I'm CEO and founder of Yellow Tunnel. And today I'd like to go over current market conditions, what to expect after NVIDIA earnings, after interest rate decisions, and where are the opportunities in the market in terms of China, in terms of semiconductors, banks, and other sectors. Where are the opportunities? For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. My background is technology, right? So I was a CTO of several companies that went public. I decided to manage my own money, hired a team of financial engineers, build models to help me manage my own money, and started Yellow Tunnel. So we have a team of financial engineers that are building models, signals in the market, and I use these signals to trade in my own account, right? So that's the difference between Yellow Tunnel and maybe some of the other services. I've been doing that for over 20 years. I'm going to go through specific trade ideas and signals. So disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into trading plan, let's go over the current market. So last week, I think one of the main events that kind of everybody was anticipating is NVIDIA earnings, right? And you do have a clear breakout, right? We were, I think, close to 1,973. We closed at 1015, 1016. So you do have a clear breakout in terms of NVIDIA earnings, very similar to last year, right? When we had a June. Right, you had a breakout, consolidation and just continuation, not only NVIDIA, but the market to continue going higher, right? So we could have similar situation, right? For now, NVIDIA had a very strong earnings, but the reaction from the, in terms of yield was kind of the opposite, right? The yield did drop after the CPI data came in a little bit better than expected. And then it rebounded, but still trading below 4.5, right? When the yield was above 4.5, market pulled back. It's staying below 4.5, so market is still in a strong uptrend. Even though you can see value stocks had a sharp pullback on Thursday, despite NVIDIA earnings, right? It didn't lift all the boat. Reached 50-day moving average, and now sitting at the very important 50-day moving average. And VTV basically everything but the technology and high beta stocks. And Dow Jones, very similar price pattern. QQQ did have a pullback. We had a rebound on Friday, so kind of going through consolidation, made new all-time highs, trading near all-time highs. Still above 50-day moving average. Semiconductors are at all-time high, continue to grind higher. Making new all-time highs. You have spiders, same picture, did pull back on after NVIDIA earnings, rebounded on Friday. And small caps continue to underperform, right? Hit the 50-day moving average, unable to make new all-time high. So the bottom line, I think short term, you could expect this volatility based on macroeconomic data, right? So let's look at I think Thursday and Friday we had PMI data, right? So services PMI, manufacturing PMI, it came in better than expected. That means the economy is stronger, expanding, and then there's less, probability of lowering interest rates decreases, right? And right away interest rates go up and market is going down. So I think that's what to expect in the next few months. What do we have on? So we have Memorial Day, market is closed on Monday. Tuesday, consumer confidence, I don't think it's going to be a major event. Fed Beige Book has been moving the market, right? Forward-leading indicators in terms of if the economy is expanding or contracting. PCE index, right? So maybe probably the most notable is PCE index. Again, it's for the month of April. We already have PPI, we already have CPI. I assume PCE will come in line with expectation. There's not going to be very large positive or negative surprise. So for that reason, I still think it's a pattern of higher highs and higher lows. I would watch the interest rate. I think we did, now interest rates are overbought, right? We were at below 50-day moving average at 430. Now we're at 450. I assume the next move is lower unless you have some kind of a strong macroeconomic data, which I don't anticipate. So I do anticipate interest to continue going lower. Regional banks, together with a small cap, pull back to the 50-day moving average, staying above that level. Gold continued to make all-time highs, did pull back significantly. Silver, same price action, it pulled back to the breakout of 27 level. So still people are concerned about inflation, they're concerned about longer-term view on the market, and precious metals, gold, silver, copper, continue to have this vertical move to the upside. And similar China, right? If you look at the FXI, it did pull back recently, but you have this strong upward momentum. If you look at the weekly chart, let's look at weekly charts. So I assume there will be some kind of a consolidation for the next few weeks, but still very strong breakout of the downtrend. And I think bullish momentum will continue through the summer. So that's China. And finally, Bitcoin is close to all-time high, right? We had another week of strong price action, retesting all-time high. Unable to break out, so bulls are waiting if there's going to be a breakout. And then crude oil. Crude oil consolidating, right? It did break through the downtrend, right? This long-term downtrend above, and now kind of staying at the 200-day moving average. So that's crude oil. Any questions on FXI? Now let's see. In terms of model, if you look at the dynamic power trader, this is the service where we have our positions. Amazon, FXI is one of the positions, and now I'm looking at the FXI. So it is overbought based on the model. It is overbought, but in the next 3 months, it should continue going higher, right? So that's the trend and the prediction for the model. So short term, I think FXI is overbought. That's why you see a pullback. But after the consolidation, I think the next move is higher. So I think the patterns of higher highs and higher lows will emerge. And the way usually we do these webinars, I do encourage you to look at the, before you go and put on position, look at the best case scenario and worst case scenario, right? The best case scenario that for the bulls that the market consolidates. Right, we have this consolidation going into NVIDIA earnings. After CPI data, we rallied, we're consolidating, right? We're trading in this box. Right, and at some point, we're either going to continue grinding higher or we pull back to the 50-day moving average. So those are the two scenarios, right? Those are two scenarios. Scenario number one, we continue to make all-time highs. Scenario two, we pull back to at least 50-day moving average. So both scenarios are possible, but I would consider them. And why would you do that? Because you need to determine position size, right? Risk management is the most important part of any trading plan, right? It's to look at your drawdown. And before you put any position, that's usually what I would do. Basically say, well, if it drops below 50-day moving average, right, we do have this kind of a neck before the breakout, this strong neck around 512, 515 level. That would be my stop level, right? If I'm long-term trading, that will help me determine the stop loss, right? So if we're at 530, and let's say I'm looking for 5% pullback, right? And if it's more, then I'm out, right? If we get more than 5% pullback, like we had here, then I would be out. And that's a risk of 20 points. And then you can make a decision how many shares to buy, right? And I encourage everybody not to risk more than 2.5% per position, right? So if you have $10,000, 2.5% is $250. You know, if your stop loss is 20 points, then you can buy 12 shares, right? So that's how you know how much you can allocate on the $10,000 account. So, and also very important not to decide what you think is going to happen to the market, right? But going back to game theory, right? So one is dichotomy of control, right? You want to figure out the economy control basically says what's more important, is it the process or the outcome, right? And the idea is that the process is more important than the outcome. You cannot seek for a positive outcome and compromise in the process. And usually that means, you know, you don't have a stop loss, you don't have target gain, you don't have a written down trading plan. So you go through positive and negative visualization, right? We talked about scenario number 1, scenario number 2. And then game theory. Game theory basically says what other people think, right? And you don't want to be always bullish or always bearish, right? You want to look at the market conditions and make a decision. So in terms of positioning, right? In the live trading room, I spend a lot of time on positioning, options positioning. So I know we have services that provide stock ideas and option ideas. So even if you don't trade options, I still encourage you to look at the options positioning, because this is another indicator where the support and resistance levels are, right? We looked at the stock forecast. I mean, we looked at our model, right? Our model for spiders. Basically, let's see, says short term 526 by 529, right? This is a short term buy and sell signal for Tuesday. You know, 530 consider selling, 526 consider buying, and still strong uptrend. We still see strong uptrend in the next 3 months, potentially get into the 540, somewhere between 540, 550, you know, in the next 3 months during summer. So I agree with the model. Short term, it's overbought, but the trend continues to grow, to continue going higher, right? So that's the trend for spiders. Long-term predictions get adjusted only once a month. So that's why you see silver, you know, prediction is 34 short-term, but long-term is 23, because it made vertical move to the upside in the months of May. And then in June, model will rerun and look at the long-term predictions. So something to keep in mind for the long-term predictions, how they've been calculated. All right, so in terms of positioning for spiders, right? So we have technical analysis, traditional technical analysis for spiders in terms of 525, 530, longer term, maybe 50-day moving average, or as low as 500 actually, to the 540. And now we're looking at the positioning, how people, where people are buying puts and where are they buying calls, right? So I'm looking at the dealer exposure. Dealer exposure basically says, you know, what is market maker buying to hedge the position, their position. So you have weekly expiration, so May 30, what is it, 26, 27, 28, 29, 30, 31, right? So we're going into May 31st. So in terms of position, you do have pretty large position now in Friday for 520. So people are concerned about 520 level, but this is the highest concentration, right? For Tuesday, you do have maybe 529, 525, but then much bigger position, 520. So between now and Friday, I don't anticipate market to break 520, right? Maybe a 1.5% to 2% pullback short term. That's the puts, and this is the largest positioning. So this is what majority of the option traders think, that 520 will hold, and they're actually hedging their position with very relatively larger volume, right? The volume is start increasing in terms of the hedges. And on the upside, in terms of call, 535. So there is a pretty large volume in selling 535 calls. So same thing between now and Friday. I don't think we're going to get much higher than 535. I would be a seller if we do get to 535. If we get to 520, I would be a buyer based on the position and what people are thinking going into the Friday. Going into the June expiration, if you remove this week, the next level is 510. So you do have large positioning at 520 that we discussed, relatively large, but next one is 510. So if the 520 level doesn't hold, so if this gap 525, 520 doesn't hold, then the next level is 50-day moving average. So that makes sense, right? So that I would watch, as long as the market is above the breakout level, somewhere between 520 and 525, 523, 524, you know, bulls are in control, right? If we continue this, then bulls are in control. If we break below that level, then potentially we could get as low as 50-day moving average, 512, 510. So scenario number one, we continue going higher. Scenario number two, we could drop to potentially 520, you know, maybe 3-4%. And those are the possible outcomes. So now I would go and just spend a minute. Let's do that exercise. Just based on all the information I provided, based on our models, based on the traditional technical analysis, based on the options dealer positioning, what do you think is the outcome, right? In the next few, you know, let's go end of June, July. Are we going to see scenario number one? We're going to continue making new all-time highs, or maybe macroeconomic condition will continue to point, you know, that interest rates are higher for longer, and then we drop to 2. So let's go through that exercise. Scenario number one. Okay, we have more people. Archana, Edward, George, Joyce, Dr. Simon, Mr. Simon, Doctor, sorry, Raj, Raymond, Richard. Thank you for joining. Really appreciate it. And see, so how many of you say we're going to 1? We're heading higher, and how many of you say 2? We're heading lower. Raymond, 2. Anyone else? And C, Mr. Simon, Dr. Joyce, George, Edward. Anyone else? 1, 2. So I mean, based on reaction after NVIDIA earnings and sharp pullback, I think most likely we do pull back, right? Most likely this is the core scenario, right? Kind of, we're going to trade in this range, but still pattern of higher highs and higher lows. I don't think we're going to break, based on positioning right now, I don't think we're going to break 50-day moving average. I think it's going to be a pattern of higher highs and higher lows and bullish momentum. Going into the, you know, elections in November. Usually, you know, June, kind of, I think potentially something similar to last year, right? Something similar to last year where sell in May and go away did not really work last year, right? Most people stayed bullish. So we did have a strong June and July. Market continued to grind higher, make new highs. And then going into the elections, right, approaching September, October, market did pull back 10%. I don't think we're going to have a 10% pullback. I mean, unless Powell does change the rhetoric and says, you know, economy is expanding, unemployment is still very low, so we're not going to lower interest rate this year, right? I think if he says something like this again, somewhere in July, August, then I think market can pull back 10%. But because of the elections and a lot of, I think, still political pressure to lower interest rates, I don't think that will happen, right? And assuming there's no black swan events where, you know, regional banks are going to start collapsing, you know, I think we're not going to have 10% pullback, right? We might have another 5% pullback going into elections, but still pattern of higher highs and higher lows. Any questions? In terms of sectors, I'm bullish on silver, right? I think commodities continue to grind higher, especially as inflation is higher for longer. We had inflation data from Britain, came in again harder than expected. So I think silver, copper, commodities in general are going to continue to outperform the market. So I would consider silver, or I think more conservative is gold. Right? Gold continues to grind higher. China, politics aside, in terms of price pattern, right? In terms of price patterns, it has strong performance, right? So I'm still bullish on China. I mean, we could have a scenario like in 23 where it did rally. Where it did rally, and then give me 1 second. Sorry about that. So we did have a sharp pullback in 23. I think in 24, because of the interest rates and commodities continue to go in vertically, I think China is gonna still continue to outperform. So I'm still bullish on China based on the price pattern. What else do we own? Goldman Sachs, right? So same theme, that Fed will cut interest rates. What are the main beneficiaries? You know, China, commodities, and wealth managers, right? So companies that are in will benefit from reopening IPO, from mergers and acquisitions. So large assets aggregators like Goldman Sachs, Morgan Stanley, right? Those are probably the biggest one, and the chart patterns looks very strong. So Goldman Sachs, Morgan Stanley of the world, General Electric, right? Some of the industrials are benefiting from additional stimulus money. General Electric is one of the strongest stocks in industrial sector, FXI. What else? Banks, right? Major banks like Wells Fargo, I think, is in strong uptrend, will continue to make new highs. So Wells Fargo, I'm bullish on Wells Fargo. Magnificent Seven, like Amazon, right? I think Amazon is gonna continue outperform, right? Microsoft, close to all-time high. Netflix. I think the AI theme is alive, right? Most of the AI stocks are on pause right now, right? If you look at the AI stocks, they're on pause. Like Palantir, right? Some of the smaller companies like Palantir is not participating. This was one of the AI darlings. Supermicro, CI. Right, Supermicro computer, you know, ARM. So some of the microchips, semiconductors that make microchips, they are not participating, right, in the AI theme. So right now, AI theme is supported by Microsoft, Amazon, and NVIDIA, right? Those are large, you know, Magnificent Seven stocks. Everybody else is kind of on pause. Maybe Dell, right? Dell is announcing earnings. Very strong uptrend. Smaller multiple, a lot of expectations going into this Thursday in Dell, but Dell, very strong performance, right? Because of a much smaller multiple than the rest of the AI stocks, right? Price to earnings 35. So those are the themes From any questions? UNH healthcare. I do have UNH position. Healthcare had a strong rebound right after the earnings. It has pulled back with the rest of the market, but this downtrend is broken, right? And I think the worst, the cost of medical care has increased, right? The input cost has increased, and you see in all the insurance companies kind of pull back. But after the last earnings, it had a strong performance. So I'm still bullish on UNH going into the next earnings season in July. Thank you, Edward. All right, so this week, what did we trade? Let's look at the earnings. So you have different services. In Earnings Power Trader, I do iron condors, right? Either iron condors or sometimes loan volatility, right? So when you make a decision, do you want to buy or sell volatility? You want to kind of look at, for example, Dell, right? You want to look at Dell. I'm going to assume, I haven't looked at it yet, but that it's going to be similar to NVIDIA, right? You do have a lot of people selling puts, right? Naked puts, selling puts. You have negative positioning going into Dell. Very similar price pattern to NVIDIA earnings, but people are concerned. People are concerned that, you could have that the upside is limited, right? So right now, the biggest position, well, somewhere between, actually, it's evenly distributed, probably to 180. Biggest position here is 185. So 10%, maybe 15% move on Dell, right? It could be a $185 stock, right? Or it could be $140 stock, right? Highest position here is at 140. So this is how people positioned, right? And since you have a lot of positioning below 50 in terms of vol skew, that means most people are doing risk reversal, right? They're selling puts, not a lot of buying calls, but they're selling calls. So kind of they're selling puts and they're also selling calls, kind of a strangle. So I think the right strategy, just like NVIDIA, is buy volatility, right? Because I think you will have, 1 or 2 standard deviation moves in Dell, either to the upside or to the downside. It could be similar to NVIDIA earnings, or it could be similar to Taiwan Semiconductor's earnings. So when you see these large positions, that helps you with strike price selection, right? When in NVIDIA, that's what we did. There were a lot of spikes in calls, right? And I think the biggest spikes were at 1,000, right? 1,000, then 1050, and then 1,100. Here you don't really see kind of a large positioning, except here. So you could do a butterfly that spans basically 10%. Let's see, 170, 175, 180, right? So you can sell 170, 175, buy 170, sell to 175, and buy 180, right? Butterfly. On the put side, it's a lot more clear, right? You can buy 150 put, 145 put, and 140, with the idea that this high open interest will act as a magnet, right? So it will gravitate toward that level, just like NVIDIA gravitated toward 1050 and actually closed right at 1050, 1060. Dell, after the earnings, could also gravitate between 140 and 150, right? So so that's butterfly, right? And you can see, if you're new to butterflies, you can just type in butterfly profit loss image, right? So this is what profit and loss looks like for butterfly, right? So if you select, let's say you're bullish, you can select your strike prices here. Right? So you buy 1 contract, you sell 2 contracts, and you buy another contract. And this could be calls or it could be puts. The advantage of butterfly in terms of profit and loss, that you can put on this trade for 20 basis points, 30. It's probably one of the cheapest way to participate in the trades like NVIDIA, right, or like Dell. Because if you're buying calls or you're buying puts, they're very expensive, right? Then you have to spend maybe 5%, 10% of the premium. So if you want to spend less than 1%, then you do butterfly, or some people prefer colors, right? You can do call color. Instead of selling two, you would sell just one strike here and sell one strike here. It's a little bit more expensive, right? Because you don't have to be correct in terms of middle strike, but you're still doing kind of combination of call spread and credit, right? One is the bullish call spread, right? And one is the bearish call spread. All right, so this is bullish debit spread, right? And this is bearish credit call spread, right? So butterflies and counters, this is nothing, just two spreads, right? It's two spreads. One is the long bullish spread and one is bearish spread. So this is image of the butterfly when you want to be long volatility. In case of this week, I traded Macy's and Medtronic. If you look at Medtronic before or after the earnings, it was you don't have negative positioning, right? Well, now you actually do. But before the earnings, most of the positioning were bullish, right? Basically, people were buying calls. You had positive vol skew, so people were buying puts to hedge, and they were selling calls to hedge, right? People were doing collars. They had stock. They were either buying puts or they were selling calls to mitigate the risk. So in that example, right? In that example, you would want to be short volatility, and one way to be short volatility is iron condor, right? Iron condor. Here, instead of having one bullish spread and one bearish spread, here you have both spreads are iron condor, right? They're credit spread. So you collecting the premium with put spread, right? This is a credit spread puts, right? And that's how profit loss looks like, right? This is your strike levels, right? Stock prices, and this is your profit and loss. So you have one each with the credit spread, call spread, and then you have the second one, right? Credit call spread. So you're selling call spread and you're selling a put spread, right? And in both cases, you want the stock to be trading in a certain range, right? In a certain range. So this is an example of iron condor: selling call spread, selling put spread. So this is something I do quite often in earnings power. I try to do a couple examples every week. So this week it was Medtronic and Macy's. Both stocks traded within the range. Most of the stocks that don't trade within the range are AI stocks, right? AI stocks. I mean, we had Starbucks. That was kind of very negative surprise, right? 2 standard deviation, and not, it's not a semiconductor stock. But most of the time, a lot of the volatility in these AI theme and semiconductors. So that's earnings power trader. In live trading room, usually I also trade aggressive power trader, right? I try to do a couple examples every week. This Friday, Texas Instruments and ADI, right? So both semiconductors were the signals. Right. So every day there is a new signal, and if I trade them, you can see them in orders and you can see them in positions, right? So I'm trading Texas Instrument because there was a signal on Friday. In this example, it's a longer term strategy. I'm buying actually a call spread in Texas Instrument. But if you want to do short term trading, then usually I would just buy a stock, right? So that's an example of aggressive power trader, where you can also see my orders position. You can enter your phone number for SMS and get messages every time I trade. So that's aggressive power trader. Weekly power trader, similar idea, but the model is optimized for a longer period of time. Aggressive power trader, short-term aggressive trading. Weekly trader, more of a longer term, right? Momentum trading, you're holding position for a few weeks, maybe even a month, right? So kind of a medium-term strategy. So that's weekly power trader. I already covered dynamic power trader. This is both combination of stock and options. So when you look at orders, you'll see a combination of longer term and shorter term trade, right? I traded General Electric, right? I bought General Electric, closed General Electric. I added to Goldman Sachs. So you have example of stock trades, and then you have example of options trades like Wells Fargo option spread that I'm trying to close. So that's dynamic power trader. Earnings power trader, right? Trade earnings, I covered that. And profit accelerators for those people that only want to see stocks, right? So it's less trading, couple trades a week, and mostly stock. Right? And you can find when you go to dashboard, when you click on dashboard, it provides you explanation of all the services we have. Right, getting started guide, we have webinars, we have dedicated support. I encourage you to schedule one-on-one consultation with our product managers. Blog, we do publish blog every Sunday. There's a blog. Please add info@yellowtunnel.com so you receive our blog. And then we have video blog every Wednesday, published twice, to give you some trade ideas, but more importantly, the view of macroeconomic view, right? And where we think the interest rates are going, where we think equity is going. So that's important. And then for each of the service, we do provide explanation, right? What you're actually getting for aggressive power trader, what are you getting for weekly power trader, dynamic power trader, etc. So I encourage you to take a look inside of the dashboard. Any questions? Semiconductors, well, semiconductors are leading, right? So that's good. When semiconductors are leading, making new all-time highs, that's very bullish. On the other hand, when you see transportation below 50-day moving average, right? That means that the economy is, not doing that great, right? So when transportation is below 200-day moving average, that's a red flag. So that's why for now, I mean, we could, in terms of scenario 1 and 2, if the value stocks don't hold the 50-day moving average, right? If you drop below 50-day moving average, semiconductors cannot keep the entire rally, right? So you need to broaden of the rally. And right now, we have seen broadening, right? We have more stocks and more sectors participating, but small caps are sitting at the 50-day moving average. Regional banks are sitting at the 50-day moving average, and value stocks in general are sitting in the 50-day moving average. So I would watch these sectors and see if the 50-day moving average will hold. I think it will, but a lot of it, I think, depends on the correlation between the yield and the equity market at the historical highs, greater than 0.7. And it's been like this for a few years. So it's very simple. I think as long as yield below 450, it's a pattern of higher highs and higher lows. If we break decisively above 450 on some macroeconomic news, right, or maybe a hot CPI data in June, we're going to get CPI data in June. When is that coming? Probably not the first week. June. Well, we have employment, right? So the first week of June 7th, we have unemployment data. ISM already had some results, so I don't think it's new. So I think the following week will be CPI data, right? The following week. So that could push interest rates, right? If all of a sudden unemployment data gets much better, right? Unemployment rate drops and hourly wages, increase significantly, and 10-year yield does jump above 4.5 and gets to, let's say, 4.7, right, or 4.8 even, then the market will pull back. So a lot of it depends on macroeconomic, at this point, on macroeconomic data, right? Earnings are behind us. until end of July, August, we're not going to see earnings. So we're kind of at the mercy of macroeconomic data, and it's kind of been mixed bag. First Solar, Edward, we had First Solar signals on active traders several times. First Solar kind of a vertical move to the upside. So very strong move. Be careful with these vertical moves to the upside, right? We talked about GameStop, right? You have these vertical moves to the upside. At some point they end with vertical move to the downside. In case of GameStop, it was 2 days, right? In case of First Solar, it's already been 4 days. So it looks like, they're doing much stronger. So First Solar is definitely, strong semiconductor. Qualcomm continues to trade higher Texas Instrument, very strong price pattern, I agree. And Moderna, haven't been following Moderna. Let's look, but it does look very strong, right? You do have a breakout. Let's look at weekly chart. You do have a kind of a multi-year consolidation right after the COVID. It hasn't been doing well, and now their technology can be applied to other drugs outside of mRNA technology, right? So the technology of making vaccine can now be applied to other, and you do have strong uptrend. Probably one that, it's probably heading to over 200 in a short period of time. So thank you for sharing. Moderna, Qualcomm, semiconductor, First Solar are definitely other strong stocks. Any questions? Archana, Dini, sorry if I mispronounce, Edward, George, Joyce, Mr. Simon, Doctor, and C, Raj, Raymond, Richard, Fred, Steve, Bob. Thank you for participating. Enjoy the Memorial Day weekend. Hopefully you can have great time with your friends and family. Monday we're closed. I really appreciate that on Memorial Day. We actually have the very good, strong attendance. That makes me very happy. Appreciate that. And we'll see you on Tuesday. Keep an eye, if you're new to Yellow Tunnel, you have this free information every Sunday, a blog, and every Wednesday video blog. That gives you kind of a view on what my opinion on the market is in terms of currencies, treasuries, market support, resistance, trends, major events this week, and some trade ideas. So that's Sunday and Wednesday. And then we have these live webinars, which I appreciate you guys participating. And we have different services, which you can participate if you want to follow my trades, or if you just want signals. That's kind of our core offering, our strength. So I encourage you to try any of these services. Friday 1,000 plus gains. Edward, nice trade on First Solar Qualcomm. Very nice. Would like an example, Richard, would like an example of your power trading system. Yeah, so Richard, we have different services. So in, let's say, aggressive power trader, you have signals every day, new signals. So right now I'm doing Texas Instrument call spread. I'm bullish Qualcomm, I'm bullish on Texas Instrument. I'm going into July 190, 195 call. So that's aggressive power trading, dynamic power trader. Let's see, what are the latest orders? So I'm long Goldman Sachs, I'm long GE, right? So I traded Goldman Sachs, I traded GE, and also have spreads like spread and Wells Fargo. And in earnings power trader this week, I usually do a couple trade ideas using either butterflies or iron condor. So this week I did Medtronic and Macy's, right? I sold iron condor on Macy's, I sold iron condor on Medtronic. Let me know if Richard, that makes sense. Joyce, thank you. Yeah, Richard, join it. We provide 30 days money back guarantee. You can look on the dashboard description of each service, and you can look at the pricing. All right, guys, thank you very much. We have a lot of people today. Looks like Sunday is a good day to get together. We'll continue doing that. Try to alternate between Thursday afternoon or at night versus Sunday. Looks like Sunday better attendance. So that's good. Enjoy your Memorial Day weekend. Thank you for participation, and we'll see you soon. Thank you.